In this video, I want to review the no pole open and how I handled that trade this morning. Before we get started, can everybody do me a favor and check and see if the subscribe button is working? It must be broken because I'm anticipating more subscribers at this particular moment. So could you please hit that subscribe button and let me know that it's working? Thank you very much. So as you can see here, we have the green Marubozu candle pushing up from the bottom. We're coming under the moving averages into the 21 period moving average, right where the cluster of moving averages start. So we're going to treat that as a whole layer of resistance, and we're going to go right into our put to the downside. So the first thing we did in the morning again was jump into a put on the first candle. I'm a little late with that entry. I should have entered it as soon as it attempted to close that gap at the top, but it's fine. We got in at a reasonable entry. We're still in the first candle, still fluctuating and flickering, but I am convicted and very confident that we are going to continue to the downside. The only hurdle I see right now in front of us is 687.80, which is this blue line right near the low. Right now you see the low, but that blue line has been a level of support previously. So we're going to go ahead and enter. Now, what I did this time, I tried the dollar cost average by adding to my winner. As you can see, I was already up and I added a contract as soon as we took out the bottom of that green candle. Okay, so this is something that I want to focus on. We want a dollar cost average and add to our winning trades, which is a better strategy than adding to our losing trades. Okay, so if we do get a pullback, it does go against you a bit faster, and it'll take you to break even very quickly, but you know, you have to pick your poison. Okay, so here we are in two contracts. As soon as we hit this moving average, we get the support line, we get rejected. As you can see, that Marubozu turned into a tail bar, so it pushed us back up, but I'm still confident that we're gonna continue to the downside. So as soon as we cross this support level, this is where we break through. So what I should have done, what I'm continuing to work on, is maybe took profit on one of those contracts right there. Boom. So here we are, we're getting a reversal. So anytime you get that, like, that is a clear sign of a reversal. That was like a pump fake reversal where they show you that green candle taking out the red candle to the left, so then you hurry up and jump in, and then boom, it turns into a tail bar on you. So I was not tricked. Make some noise for your boy for not being faked out by that pump fake, that attempted crossover. All right, so as we continue down, boom, as we approach 20%, I'm gonna go ahead and close out one contract now, take profit on one contract. I didn't want to wait to 20%. Let me get some money in the bank. Now we're a little bit extended away from the 21 period moving average. You can say one candle, two candles. So this is like the second push, but it's so elongated we can consider it the third push, and that may have been the best place for me to take that second contract. Sometimes I'm still working on my game, whether or not I should win and where I should take all the profit versus taking some of the profit. All right, so here we go. I added another contract on this pullback. All right, so we pulled back. This is what I was thinking. We broke through 687.66 with this red candle. So we're coming up with this green candle to retest it. And I entered right there at the retest, but I might have entered either a little early before it got up to that line. So I'm thinking we'll break, retest, add on the retest, and then on the next low, I'll take all of the profit. So that was the strategy. So we had 1, 2. So we entered the big red candle. We entered the first candle, but we entered the put So I miscalculated my 3 pushes. So that's what happened. So I entered the first candle. That first red candle you see to the downside is push 1. Then push 2 takes us to 687.66. Push 3 is the big red candle that burst through it. We just retested that support level. And here we're almost at a 4th push right here. Boom. So right when we take out this new low is where I should have taken all of my profit. Right when we make that new low, I should have taken all of my profit, because that was 1, 2, 3. That was 3 pushes. All right, but remember, I already took profit on 1 contract. Then I added to the second added a second contract on a pullback. So your boy is getting into it. All right, Stock Market Daddy is getting into the thick of things. All right, and here we go. So expecting this continuation to the downside, real flush, but at the same time, we do have our 200 period moving average, our 21 period moving average relatively, well separated. And now the price is separated from the 21 period moving average. So again, I'm looking for 20%. Again, I'm looking for 20%. But looking back at this trade, I wish I would have snatched those profits. I wish I would have snatched those profits. So sometimes I'm still trying to determine when is the best time to take profit, and I have a take profit strategy plan written down. And what I'm going to do next week is I'm going to pull the plan out and sit it in front of me. Because right here, as soon as this green candle takes out the top of the red candle, this is right there. That's when I should have just cut the play. Right there. As soon as that first candle was lost, I should have cut the play and said, it's okay. You broke, it reversed on you. Okay, it reversed on you. But it's still 30 seconds left, so I'm still hopeful that this will wick out and close without taking out the red candle. Now my stop loss is all the way up here, so that's another thing I can improve on in my next trade, is to bring my stop loss down to the last big bar. So my stop loss should have been right when this green candle took out the red candle to the left. I should have stopped myself out. That would have been maybe plus $2 or break even. But here I am allowing it to pull back and eat into my gains. Yikes. I was up $24, roughly 10% on these 2 contracts. And I allowed a green play to turn red. And to give myself some credit, I did take partial profits on 1 contract. I left 2 runners in. And again, I should have added. This is another opportunity to add. But with this power and the way it's moving up, I'm just, taking it easy, not trying to add to my losers. I don't want to tarnish a good trade by doing something that I have agreed, or I've promised myself that I would do a lot less of, or not do at all, which is dollar cost averaging losses. This tail bar from the 21 period moving average, expecting to come back down here to 687.17 and wipe out the play. All right, so now we're back to break even. Back down here to break even. Continuing to push. But this green candle from support, and it's also the failed second bottom from this double bottom. You can see the double bottom there. So I should have known that this was going to be a power move up. If I really wanted to capitalize, or if I was convicted, I would have cut that play as soon as this green candle took out the red candle and got into a call option going the other way. and rode this up to the 50 period moving average, because remember, the SPY ETF chart respects the 50 period moving average the same way many other stocks respect the 21 period moving average. And this is another reason why it's so important to get intimate with your stocks. Get up close and personal. Like, everybody else don't gotta like her. If you like her, that's all that matters. She might treat you better than she treat everybody else. You can't go off of how she treats other people. You gotta go off of how she treats you. All right, so here we go. Here we go, still treading lightly, still being patient. Here we go. Here we go. And continuing to push up. Continuing to push up. And this double bottom is doing what double bottoms do. Again, if you're going, what I've realized, the aha moment that I've recently had is that if I'm gonna sit in a losing trade and watch it go the other way, I might as well cut the play and jump in going the other way. Or I can go the other way while I'm waiting for it to come back. But there's always an opportunity to make money. There is always an opportunity to make money. Especially when you become intimate with the stocks that you trade. You exercise patience, you do your due diligence, you study your charts, you get your screen time, you get your chart time, you understand your support and resistance, you lock in a strategy. So this particular trade is what I would consider like a B+ strategy. My favorite strategy is the flag and bag strategy, is what I refer to it as, the flag and bag. All right, so this was more like a no pole. This is almost a clear continuation of what happened the previous day. And here we are getting rejected from a level of resistance. So it still never hit my original stop. So I'm still good to be in, but I should have moved my stop down because I didn't want to give back all of the money that I made as well as the time. All right, so here we go. This is how you get trapped. As you can see, you see where we came down from, that green candle all the way at the top, the highest green candle. We came all the way down to 687.17. Then when we went back up, we didn't quite get to that high again. And now as we come back down, we're not gonna quite get to this bottom. And that's how you can get trapped in both sides of the play. And you know, the earlier you jump into these things, the quicker you can get swindled. All right, so I attempted to take profit at $4. I think I got out at -1, but it's okay. That's a good way to cut your play. I ended up cutting that play. Just to get into another put here. Not exactly sure why I did that. And then I went ahead and got my $4 back. All right, peace and love, and I'll see you in the next video. Subscribe to the channel, like and comment.